Herzlich willkommen zu einem exklusiven Interview mit wohl einer der bekanntesten Tech-Investoren dieser Welt, Cathie Wood von ARK Investment. Ich habe mit Cathie über disruptive Technologien gesprochen, wie ARK Investment diese definiert und wie sie Unternehmen finden, die in diesen Bereichen eine entscheidende Rolle spielen oder in Zukunft spielen werden. Das ist ein sehr interessantes Gespräch geworden, das ich auf Englisch geführt habe. Du wirst also jetzt im Folgenden das Interview in Englisch sehen, aber wir befinden uns hier ja in dem Bereich der disruptiven Technologien und da spielt künstliche Intelligenz ja auch nochmal eine wichtige Rolle und deswegen haben wir dieses Video, das englischsprachige Video, dann auch durch eine künstliche Intelligenz Lippen synchronisieren und übersetzen lassen. Wenn du das Interview also in Deutsch sehen willst, dann findest du in der Videobeschreibung noch einen Link zu dieser Übersetzung und dann kannst du mit eigenen Augen sehen, wie gut künstliche Intelligenz mittlerweile ist. Ansonsten wünsche ich dir jetzt viel Spaß mit dem Video. Auf geht's! Yeah, hello, Cathie. I'm really delighted that you have time today and talk to me about obviously ARK Investment, your ETFs, and also your thoughts about the digital environment in all the world and all over the world. Thank you very much for your time.
Oh, thank you, Marcus. I'm very excited to share some thoughts with your viewers.
Yeah, a couple of days ago, we reached the 30,000 subscribers on our YouTube channel. So that's a perfect timing for our video now. Yeah.
Yes, wonderful, wonderful.
Cathie, before we start, I want to play a little game with you. I thought it could be fun as an icebreaker in the beginning. I would tell you now 3 sentences. Start with the first part of the sentence, and maybe you can finish the sentence with a short thought which came in your mind about that.
Okay.
The first sentence would be, the last disruptive technology was, in my view.
The last disruptive technology? I guess the biggest one was the transistor, which started the computing age, which led into the internet. So I would say that was critical.
That one.
Yes.
Okay, perfect. Then the second one is maybe a little bit easier. It's just imagination. In 10 years, a robot will help me with.
A robot will help me with almost everything I'm doing, whether it is with knowledge work or with physical work.
Okay, good. And the last one was, I choose Florida as my company headquarter because?
We chose Florida, a few things. Certainly the tax regime here is much more friendly. But perhaps more important than that, and the weather's good too. But as we were traveling around trying to figure out where ARK could make a difference to a community, we found that St. Petersburg, which is right across the bridge from Tampa, was that city. And we were absolutely right about it. The city has been, we've got a wonderful kind of symbiotic relationship. We're helping with education. We're helping bring startups to the area. And of course, we're running our business here.
Yeah, my first thought was maybe you are based in the Silicon Valley, but I was quite surprised that you are based in Florida.
So very interesting you say that, because this area is known as the Tampa Bay area. So what we would like to do is turn it into the next Bay Area.
Okay, then it's probably auch much cheaper there to live instead of Silicon Valley. Yeah.
Without a doubt.
Yeah, thanks. Thank you for your insights. Cathie, the first question I think would be nice if you could explain a little bit why you founded ARK Investment. It was in 2014, so you have your 10 years anniversary this year, or already had it, I don't know exactly. And why you choose a little bit different investment approach than general investment firm, let me say.
Yes. Well, we are highly differentiated in that we're not a generalist asset management firm. Our focus is exclusively on disruptive innovation, technologically enabled disruptive innovation that is going to cut across economic sectors and really transform the way the world works. And so there are 5 platforms: robotics, energy storage, artificial intelligence, blockchain technology, and multi-omic sequencing. So 5 major platforms, but they involve 14 different technologies. And so what I wanted to do was not only focus on one area that I felt was being neglected by the traditional asset management world, which is very focused on benchmarks. Benchmarks are more about what has happened historically than about what is going to happen in the future necessarily. But I also wanted to change research. I wanted to open it up, make it transparent, give our research away, but also analyze our analyst responsibilities, not by sector or industry or sub-industry, but by technology, those 14 different technologies.
When you start the company, was it clear that these 14 technologies will appear, or was it at the beginning maybe just 1 or 2, and then over the time it emerged? Because 2014 is 10 years ago, so
yes.
I founded the company in 2007, so there was no iPhone at this time available.
No, that's a great question. When we started the firm, we knew we had 4 platforms. So robotics, energy storage, and sequencing technologies, multi-omic sequencing. We called it genomic sequencing. And then we called the 4th one next generation internet. The internet was well established, and we knew that it was going to spawn more innovation. And what we learned very quickly as we were doing our research is blockchain technology. We started doing research, intensive research on Bitcoin. And we took our first position in it when it was only $250. Today it's $60,000. And we still think it has a long way to go. But we weren't sure, we weren't quite sure if it was ready for prime time. But as we were doing our research, we said yes. And then the second one was artificial intelligence. And in 2012, there was a competition called ImageNet. And that's where we learned about the big breakthrough in artificial intelligence called deep learning, which has led to transformer architecture and ChatGPT as we all know it now. But back then we were learning more about deep learning, and we realized, okay, AI, which has been around for what seems like forever, certainly in science fiction, was ready to make the next big leap forward. So we split next generation internet into 2 platforms. And yes, the technologies underlying them, the 14, we probably started with 9. And those have evolved because these platforms are launching pads for more innovation. And just to give you an example there, if we couldn't sequence the genome, we wouldn't understand mutations in the genome. Mutations are the earliest form of disease. And now that we can sequence, gene editing is possible, editing the genome. But if we couldn't sequence, gene editing wouldn't exist. So that one has entered the 14 technologies.
If you look at AI in the last couple years, it was a very intensive time. You mentioned already ChatGPT, but there are a lot of other companies, NVIDIA also. Is it typical for disruptive technology that is in the market? It takes a very long time to develop, for example, to get some breakthroughs, as you mentioned before. And then if it's done, then it accelerates and it goes much, much faster? Or how is a typical development of a disruptive technology?
Yes. So we expect technologies to go through a certain wave pattern. It's the saddled adoption curve. So it looks like a saddle in the middle there. And what is that? We have the beginning phase that gets people really excited. Investors are pouring a lot of capital into it. And sometimes what happens is there's so much capital, and maybe too much capital too soon, that we get a settling out, where just everybody settles down and we realize, okay, not everything is going to happen that quickly. In the case of AI, for example, large corporations are going to be somewhat careful because AI is subject to hallucinations. Sometimes it's wrong. And so there are certain things we can do with AI right now in corporations. We can write emails because human beings are going to check them over. But you're not going to do a lot of the automated AI dream that a lot of capital is financing now until this is more settled as a technology. And so you might have just a little bit of a lull, but in the case of AI in particular, we think this is one of the most disruptive platforms in history, and that it is going to create incredible economic activity and wealth over time. So with all technologies, we know that there's a little hype in the beginning that gets everybody really excited. And then there's the reality of adoption. And there will be waves of adoption. But to get the massive adoption, we think, we need to learn more about, where the errors are and how to avoid them.
But if you take, for example, AI, then that's also typical that you have a technology, but this technology can use in different sectors and different business models, from reducing cost of generating new possibilities. So that's maybe also a sign of a disruptive technology, that the technology itself must be, founded, but then it could be used in different sectors and environmentals.
Yes, absolutely, Marcus. So you've got it. That is why I founded ARK. I founded ARK because these platforms are going to cut across sectors. Even if you look in the multiomics or genomic space, that doesn't apply just to human beings. It applies to animals. It applies to plants and crops, being able to grow crops with 1/3 the amount of water or with very little pesticide or herbicide. So, yes, these platforms, we call them platforms for a couple of reasons. In fact, they meet 3 criteria. The first one is they're technologically enabled, and so they follow learning curves, which are expressed as cost declines, which turn into price declines. So technology is deflationary, but it's good deflation. As those prices fall, units take off. So that's the first characteristic. The second is that these platforms will apply to much more than just one sector. In fact, we think they might apply, in the case of AI, to every sector. That is why it's such a massive innovation platform. And then the third is that each of these platforms serves as a launching pad for more innovation, as I described with sequencing and CRISPR gene editing before.
As you know, we are a platform about ETFs,
Yes.
and most of our viewers, I would say, invest broad, diversified. And with their broad diversification, they also invest in these companies which are you investing. But how you identify the relevant players in the market? Because if I buy the broad market with a sector ETFs, for example, then I have all, but you are very focused in your products. We talk later about your different ETFs which you're offering. And there's a very concentrated portfolio of, I think, in the ARK Innovation, just 35 stocks. How is it? How is the process to identify these hidden champions?
Yes. So our starting point in terms of process is from the top down. Now, when I say that, I want to make sure that I also emphasize that we are as bottom-up, stock research-driven as any other team you'll find out there. But there are two differences. Our starting point is from the top down, and we have a 5-year investment time horizon, whereas the time horizon of most investors these days has collapsed to very short, but just because of the competition from interest rates. So as we're starting our research from the top down, we're not using any benchmark as our guide. We're actually doing research. We take a white sheet of paper, for example, and let's say in 2014, we are trying to figure out what Elon Musk meant in his master plan when he talked about autonomous technology. What is an autonomous vehicle? And so we sent one of our analysts, Tasha Keeney, out there, working with her colleague to help us understand what is an autonomous vehicle, what's going to go inside. So we learned about battery technology. Sam Corris is our expert there. But what about this autonomous part? What does that mean? What will go inside that vehicle to make that happen? And as she was doing her research, and we're talking about working with academic institutions, also just pushing questions out into social media. Back then, I never dreamed that Twitter or X would become the most prolific social platform for a knowledge worker like ARK, but it is. And so as we were going out there talking about autonomous and, probing, we learned very quickly that the brains of an autonomous vehicle were going to be GPUs. And I remember back then saying to Tasha, wait a minute. NVIDIA's GPUs are the brains? Nobody knows that. Nobody has any idea. The only thing we understood about NVIDIA at the time, and we owned it at the time, was it was a PC gaming chip company. And PCs were falling at a double-digit rate, so it was getting tortured in the market. So as we were doing more work on how important GPUs would be to autonomous, which is really autonomous vehicles are, AI projects, right? We began to understand how important NVIDIA would become to the movement. And so it became a large position in many of our portfolios. So our research leads us to the stocks that are going to make this new world happen, or to the companies that are going to make the new world happen. And of course, we invest in the stocks.
If you identify a company which match this pattern, would you invest it on any price in it? Or are you, because the disruptive innovation has its worth, but if the stock is way too expensive, then you're using it as a watch list, put it on your watch list and observe the company and then buy if the stock goes down maybe? Or how is the process on that?
Sure. In the case of NVIDIA, it was probably trading at 12 or 13 times earnings at the time. So that one was easy. But you're right. If we're in an environment full of excitement about innovation, some of the, like we were in 2020 and 21, many of our stocks, they were up 3-4-fold then. And yes, we were taking profits and redeploying into more reasonably valued innovation companies. So yes, we're cognizant of valuation from this point of view. We have our chosen metric is enterprise value to EBITDA. So enterprise value is the entire capital stack, equity, debt, cash. EBITDA takes away the financial engineering games associated with EPS. So, share repurchases, we're not considering those to bump earnings. We're looking at true underlying cash flow, really. And what we assume is that wherever that metric is today, that it is going to drop over the next 5 years to a market multiple or even below a market multiple, which is the case today. Mm-hmm. And we assume that headwind. And because our minimum hurdle rate of return is 15% at a compound annual rate over the next 5 years, our analysts must believe that the revenue growth rates and margin expansion is going to overwhelm the valuation compression over the next 5 years. Mm. So that minimum 15% is critical to us. Now, just to give you how much our strategy has corrected, meaning there's been, in the interest rate environment that we've seen, there's been a massive shift away from our strategy towards lower volatility strategies or even to cash. Mm-hmm. And so our multiple has compressed so that today we are about 1 point above a market multiple. And I've never seen that before. Never seen our strategy on sale like this before, because our growth rates are much faster than the markets, at least double the markets. And so we feel like we're at a very good valuation now, unlike where we were in late 20 and 21. You know, back then, I was even saying, keep some powder dry. This is not the real world. Mm-hmm. But this is all we do. So we've had to, move the portfolio towards, certainly back then, towards the larger cap, more at the time, larger biotech companies that were doing well from an innovation point of view. And of course, what used to be called the FANGs at the time, which were much lower valuations than some of the valuations in our portfolios at that time.
Interesting. Last year in September, you bought a European ETF provider, ETF boutique,
Yes.
Rise ETF, and
Yes.
now you are offering 3 of your ETFs also in Europe. And I think that's a good time talk a little bit about the ETFs. We talk a lot about the general investment approach. Now
Yes.
a little bit more about these ETFs. This is the ARK Innovation. That's your flagship product in the US, also available now in Europe. Then ARK Genomic Revolution, you already mentioned it, and
Yes.
ARK Artificial Intelligence and Robotics.
Yes.
The names a little bit gives the strategy, a tip to the strategy, but maybe you can introduce the strategies in a short way.
Sure.
What can an investor expect if he invests in these products?
Yes. So ARKK is the ARK Disruptive Innovation flagship portfolio. And that one features all 5 innovation platforms and underlying technologies. So in the context of what we do, it is a very well diversified exposure to disruptive innovation, technologically enabled disruptive innovation. So it includes all 5 of the platforms, as I mentioned, and the technologies. The other 2 are more specialized. One, ARKG, is mapped out just like ARKG here in the US, as is the flagship. That is focused on the multiomics revolution. And in that portfolio, we have companies, one of which is European headquartered, CRISPR Therapeutics, which is curing disease, absolutely curing diseases for which there were not even treatments for symptoms. Now we have cures for sickle cell disease and beta thalassemia. That company, as I mentioned, CRISPR Therapeutics, is about to commercialize those 2 therapies that have been approved in the US, UK, and Europe in the second half of this year. So many people say, oh, well, the genomic revolution, that's going to take forever. No, it is happening now. The other thing that's happening that you'll find in that portfolio is companies that are aiming to diagnose cancer in stage 1 with blood tests. So tumors shed into the blood. And with blood tests, the combination of sequencing technologies and artificial intelligence, we're able to identify cancers in stage 1 or even before stage 1. If you, in the case of colorectal cancer, for example, we know the precursor of colorectal cancer is a polyp, right? And the polyp also sheds into the blood. So this is going to revolutionize cancer therapy. If you can catch it early, then the odds of survival are something like 75%, 80% over the next 5 years. Mm-hmm. If you don't catch it and it metastasizes, then, then of course, we don't see any success like that. Mm-hmm. So those are the exciting technologies that are coming out because of the convergence of technologies like sequencing, AI, and CRISPR gene editing. Mm-hmm. So we capture that, and some people will call it advanced medicine. The only reason these new therapies exist is because we now have the knowledge and the science. It was way too expensive to sequence a human genome 20 years ago. In fact, 20 years ago, it cost $2.7 billion to sequence one person's genome. Mm-hmm. Now we're down to $200. Mm-hmm. So that cost decline is what makes this possible. Mm-hmm. And then the third one, ARKI, so artificial intelligence and robotics, that we have developed specifically for the European market. When we developed our funds, as I mentioned before, artificial intelligence we hadn't broken out. So we call the fund here in the United States Next Generation Internet. But here we could be much more specific, AI and robotics. And what's interesting about that is it's going to incorporate all kinds of autonomous travel, not just autonomous vehicles, meaning cars, but autonomous trucks and drones for parcel delivery, and even air taxis. Because if we're right, when it comes to autonomous travel, the costs will decline. Again, you're taking the human being out of the equation. That's the biggest cost. And so the cost of transportation will decline, and we will therefore get more of it. If we're right, the cost per mile will drop for a personal vehicle from roughly 70 to 75 cents in the US to 25 cents when we've scaled autonomous travel in the next 10 years. So we'll get more of it. And that's what took our research into the skies.
When I look at the top holdings from the ARK Innovation, there Tesla is one of the biggest position. Is that the reason why it combines so many technologies? So you have robotics, you have autonomous driving, you have electric vehicle, you have energy, battery technology, so many things included in one company.
Yes, and it's been very controversial over the last 10 years. Still is controversial, but in the beginning, it was controversial because the analysts following it were auto analysts in the traditional world. And we were looking at Tesla as a technology company, as a robotics company, because we had this idea of autonomous travel in mind, as an energy storage company, as an artificial intelligence company. And the convergence of three technologies, think about that, so once you get through the saddle part of the S-curve, you go into the steep part of the S-curve. And we believe that with autonomous transportation, Tesla will enjoy one S-curve feeding another S-curve, feeding another S-curve, and which will create explosive growth, we believe. And we also believe that autonomous travel is going to be a winner takes most opportunity. It's the largest AI project on Earth. And, we wrote that in our research, and Elon Musk lifted it and basically agreed with us. It is the largest AI project on Earth. And so we're known for our research. We've published our models. If your viewers would like to see how we get to our $2,300 price point in 5 years, 5 to 6 years, they can look at what variables we think are important, and they can change our assumptions if they want. And you'll find that on our website at ark-invest.com. You can also find it on GitHub.
Yeah, we can put a link in the video description.
Yes.
What I always wondering is, speaking of Elon Musk, he is the founder of Tesla, and but also the founder of different other companies which are also very successful. And I always wondering, as an investor perspective, is it good that one person is so much connected in different companies? You also mentioned X before.
Yes.
It's kind of a risk. What happened if you have too much workload and it doesn't work anymore? So all companies are at risk. So I always thought that investors want people that focus on different companies or different work. How is your opinion on that?
Yes, and historically I would have agreed with you. But something's happening in the technology world that's very important. We've already talked about it. It's the convergence among technologies. And the biggest catalyst here is artificial intelligence. So everything that Elon Musk is doing involves data, different kinds of data. Tesla has collected more real-world driving miles than the combination of all of the auto companies and technology companies in the world, including in China. And that is giving his AI engines the ability to get people from point A to point B as quickly, the quickest and the safest among anyone else out there. So winner take most. But, it's very interesting, the other kinds of data that he's collecting. If you look at X, that is a fantastic source of data for AI. And if you look at Neuralink, that's got genomic data. Neural networks are patterned after the brain. Neural networks, that's what AI is all about. So he is pulling data from different parts of the world. And we're looking forward to seeing how he will combine all of this data. Because we know that genomic data, for example, is because of it's related to biology, and because AI is patterned after the brain, there are biological ecosystems that are patterns for other things in the environment very naturally. And I think he understands that and is going to unlock some secrets about whether it's life and death or about transportation or teleportation, given what he's doing with Neuralink, that most people aren't even thinking about right now. He is our Renaissance man. I've always marveled at Renaissance men and how many different fields they were able to study and excel in. He is our Renaissance man. And because we moved into such a period of siloization and specialization, this new world, which is all about convergence between and among technologies, between and technology blurring the lines between and among sectors. Because the world is changing so quickly, we think he understands and has a beat on it in a way that others do not. To the extent they're still siloed, this world will pass them by.
When I look at the portfolio, I also see more or less just American stocks. Is it because you're based in the US, or is there no disruptive technology companies, relevant companies all over the world. I would assume that in China or maybe in Europe and some places are also companies.
So to give you a sense of how much we will venture into the rest of the world, during 2020, when we could do no wrong, you could just, I think you said, you could just throw a dart. Didn't matter. All of the stocks did well. We felt uncomfortable with that, and we were trying to figure out who is responding to this COVID crisis the best from an economic point of view, not just throwing money at everything, keeping money supply under decent control. And that country was China and some other countries in Asia. So nearly 25% of the flagship portfolio was in Asia and Latin America. And then, of course, what started happening in China all too quickly was the government started to become very heavy-handed, especially with companies started with Alibaba and Jack Ma. And so we, within 9 months, had pulled out because we knew this was going to hurt innovation there. And, at the same time, what was going on here in the United States, innovation was getting crushed as investors began to fear that interest rates were going to go up in response to supply chain bottlenecks and inflation. And so we naturally gravitated back here. But to answer your question directly, we believe the cost of innovation is collapsing here. And AI training costs, for example, are dropping 75% per year. And AI inference costs are dropping 85-90% per year. And we have open source models like Llama 2, Meta Platforms Llama 2, that anyone can build on and create new companies. So we are actually using AI to develop a heat map to figure out where those companies are. And so, no, we believe that this innovation revolution is going to go global. And as I mentioned, CRISPR Therapeutics is Swiss-based. Emmanuelle Charpentier, she was one of the Nobel Prize winners for CRISPR-Cas9, which is CRISPR Therapeutics and Intellia. Both are building companies on that. So at Spotify, we hold in some of our portfolios. We believe that it is, dominating the audio world in a way because it saw the future and dedicated itself and wasn't afraid of the big music labels who have, terrorized businesses involved in music in the past. And as I said, we are going to go where the innovation is. It so happens that in the U.S., our focus on truly disruptive innovation is so differentiated that as investors have become very cautious in this interest rate environment, they have leaned into benchmarks. Our portfolios are great diversifiers from benchmarks. We have only 5% overlap with the NASDAQ 100, for example. So that's the value add we bring. It's earlier stage and highly differentiated, but completely involved and driving the revolution, the various technology-enabled revolutions that are underway today.
So that's the perfect satellite for our core satellite strategy.
Yes. Yeah. It is. Many people use our strategy as satellites, and they also use our strategy as a hedge against the disruption to the traditional benchmarks. I mean, if these are truly transformative, think Tesla. Well, we think a lot of auto companies and traditional transportation companies that are involved in the auto sector are going to be displaced or disintermediated. So, we're a good hedge against the disruption in traditional broad-based benchmarks.
As an American investor, how is your view about German in particular? Because my thought is that Germany always has the mindset of more regulation, no risk, nothing, try and error. Everything is more boxed and regulated. But these, I don't know the word for that, these items are not necessary anymore, or not so relevant anymore. Let me say it like that. How is your view on Germany in particular on that?
Well, we're looking at the regulatory arbitrage that is taking place around the world. So just to give you a sense of that, as you may know, the SEC here, the Security and Exchange Commission here, the regulator, has been quite hostile to blockchain technology generally. Rightly or wrongly, I think our judicial system is saying, no, you're out of line. But anyway, until recently, very hostile. So we saw part of the movement migrate to Berlin, Germany. And in fact, one of our crypto analysts lives in Berlin. I think he may come to St. Pete, but he lives in Berlin right now. Mm-hmm. So we've been watching regulations around the world. I think that what's serious for Europe, and a big risk, I think, it's not just Germany, it's the European Union because of the way regulation is being done there, is we are seeing a lot of companies involved in AI now pulling away from Europe because, of the fines if they don't adhere to certain privacy policies. And AI by its nature causes all kinds of risks, and the rules and regulations don't allow for much experimentation in Europe. In fact, Palantir, which we think will become one of the biggest AI software companies in the world, is pulling employees out of Europe because the risks are too great, and the shortages of talent here in the U.S. are such that there's an incentive to do that. So I would say that regulation it is a risk. Just to give you an easy example, I went through Europe with what used to be known as RISE, now ARK Europe, and the desire to learn about innovation was marvelous. I mean, I loved it. It was fantastic, Germany and elsewhere. But the difficulty in terms of helping everyone understand what's going on was with full self-driving, FSD for Tesla. The regulators in Europe are not allowing it. So you have no idea what we understand to be how close full self-driving is to fully autonomous, because the regulators won't allow it. So you have to come to the U.S. to get a sense of, I can go from one side of this island to the other through all kinds of traffic and pedestrians and never touch the wheel, never touch the accelerator. That is happening today.
Did you drive by your own in a self-driving car?
Yes. Now, because of the regulations here, I still have to sit behind the steering wheel. And if I take my eyes off the road, Tesla knows it. So it's all gone biometric, and they tell me to get my eyes back on the road. So I don't touch the steering wheel or the accelerator or the brake, but my eyes have to be on the road because I have to be watching out. It's not perfect yet. And it's definitely not perfect when it comes to parking. So, but it is getting there. In Europe, I realized, wow, you haven't had this experience, so you don't know what I'm talking about. And I think it's because of the regulations in Europe.
If you must choose one of the three funds, which one would you choose? The flagship product, because then you have all strategies or segments in it, or would you choose a different one?
This is like picking a favorite among children, right? So I've learned never to do that. But I will give you how I see people choosing them and the reasons. If they choose ARKK, it's because they're very interested in the genomic revolution, but they don't want to be so specific about, innovation. They want broad-based exposure to innovation. Mm-hmm. If they want the genomic revolution, because they're seeing in their own lives, people getting tests, blood tests, and identifying cancer, or one of their friends with sickle cell disease or beta thalassemia cured, they realize what miracles are beginning to take place, and they want a slice of that. So definite satellite strategy. And then the last one, the AI and robotics, AI, I think because so many portfolios have NVIDIA right at the top, and they have good exposure to that. And yes, we own NVIDIA in that one, but it's not in the top 10. We've got software providers and others. And the reason for it is because we're saying, wait a minute, NVIDIA has done a lot of work here. And if that valuation is going to prove out, then a lot of other companies have to benefit. And they're not being valued in the same way that NVIDIA is, with the same expectations. And in fact, not at all. And the reason we wanted to combine it with robotics is autonomous transportation is the largest a set of AI projects in the world. And so we wanted to have that represented in one fund.
Mm-hmm. But then you follow on YouTube some robotic channels. You always see the training videos from, I think, General Dynamics is a company called. I think it's not a stock where you can invest. I think there was a company of Google, but they sold it a couple of years ago. I'm not so well informed about that. But a lot of the innovation are also not in listed companies. So how did you solve that problem? Because you cannot probably not invest in these companies.
Right. So it's Boston Dynamics is that company. And I think SoftBank may own that now. I think, not 100% sure. So yes, a lot of companies. So we could get exposure to that through SoftBank, which is a public company, but that's not how we're choosing to do innovation. We're doing this stock by stock. We don't want a SoftBank to manage our exposures because we're doing so much research and have such a strong point of view about what is how innovation is going to play out here. We do have a venture fund. It is not available in Europe. So we've always had to do research on private companies because we have a scoring system. It's a 6-metric scoring system. 4 of them are quantitative. 2 are not. One is valuation, which I described to you earlier. The other one is thesis risk. And thesis risk can include all kinds of things, government regulation and so forth. But it also importantly includes, what technologies are in the pipeline, in the private world that could disrupt our technology. So really important that we have a strong point of view. I do see in the public markets, though, the valuation of truly innovative companies is much lower than in the private markets. So we're selling at a discount, a significant discount to private companies, which is also an arbitrage opportunity.
Cathie, thank you very much. Maybe I have a last tip for you, investment tip. You can invest in extraETF. That's a really good investment.
Well, we can certainly take a look at it.
Yeah, I think it did worse. No, I'm just kidding. No, really, thank you very much for your time and for all your explanation. I think it was a really interesting talk with you. And it's always so refreshing to discuss with American citizens about some views because you are a special open mindset, which you not often find when you have discussion like that in Europe. So thank you very much for your time and all the explanations.
Oh, it was my pleasure. Thank you for giving me the opportunity, Marcus.
You're welcome. So, das war der Talk mit Cathie Wood. Ich hoffe, da waren die ein oder anderen interessanten Aspekte und vor allem neue Aspekte für dich mit dabei und du hast einen guten Einblick in die Arbeitsweise und Sichtweise von ARK Investment bekommen. In der Videobeschreibung findest du nochmal Links zu weiterführenden Informationen, unter anderem zu den 3 ETFs, die wir kurz besprochen hatten und natürlich auch zur Webseite von ARK Investment. Wenn dir dieses Video gefallen hat, würde ich mich sehr über ein Like freuen und schreib doch gerne mal auch in die Kommentare, wie du ARK Investment und die Sichtweise und Ansätze von Cathie Wood findest. Ansonsten würde ich mich freuen, wenn du den extraETF YouTube-Kanal abonnierst, dann verpasst du kein weiteres Video mehr hier auf dem Kanal. Bis zum nächsten Mal. Ciao.